we definitely see a clear change, especially among the younger debtors. We see that they prefer more technological tools like the phones, like the emails, and what we see is an interesting path where the younger, let's say late payers, actually prioritize their phone bill instead of their bank bill. Because if I don't have my phone bill paid, I cannot stay in touch with my friends. My name is Georg Kovacs. I've been with the EOS Group for about 12 years now, and I'm the Managing Director of Romania. Today I'm attending a retail banking conference. The main focus of the conference is to look at the trends and the developments of the retail banking and the future of the retail banking. It's a clear change. It's not only, let's say, the internal processes that has evolved with the technology in terms of scoring, but what you said also, the communication with the debtor or the customer, we still call him customer, with the customer, how can we interact with him and what is his expectation. I agree with Jim that definitely the expectation of the end customer, the debtor, has increased in terms of, one, the solution that we can offer him of how he can pay, and also how he can communicate with us. It's not the letters anymore that you send, but it's a various tool that meets the various demands of all the type of customers. One of the key aspects of the retail banking industry is the actual relationship between the bank and the customer. So who owns the customer relationship? And here we see a shift where Apple is coming in with Apple Pay and starting to manage and be between the bank and the customer. And this will have a shift of how the customers interact with the banks and how data is flowing between the banks and the customers. The majority of the people who don't pay due to social reasons. This may be divorce, there may be death, unemployment, a change in the social status. Most debtors do not stop paying because they don't want to. And one of the key aspects, as I mentioned, is for us in the industry to find a solution for the debtor.
George, let me turn to you. When you brainstorm with your team about what's coming next, how are things going to change with people more and more into their digital space?
We follow what the banks do and the strategies that the creditors take. So the more customers will go online, the more we will have to go online. One of the key aspects that was mentioned is who has the relationship with the client, who owns the future. So the stronger relationship the creditor has with the customer, the easier it will be for us to work on the back end. And of course, the easier we can work on the back end, the more we can return to the banking system. The more we can return to the banking system, the lower the fees will be for the customers themselves. So I do think that that is a key aspect. For us, being on the back end of the relationship with the customer, it is important to see and understand what will be the future relationship with the customer. How will the banks interact with the customers of the future? How will the branch of the future look? Will there be a branch of the future? The customer will always remember where he got the credit from. He will always remember that my relationship was with so-and-so bank, no matter who's actually trying to collect with him. Therefore, it's important for the bank or the financial institution to pick a partner that is reliable and dependable, who will then make sure that the relationship of that client is kept during the end process when the customer is not the customer anymore, but he's a debtor.